Now friends, come to this particular question, and this particular question we will first of all discuss everything about the business trust, and later on we will discuss about unit holders. Okay, see, and I have time and again told you that before you start the class, you better read the question properly. If you want to pause the video and read the question properly, because question reading I am not doing. Okay, see, first of all, different types of income of business trust, which is already given, registered with SEBI. Okay, and it has got variety of incomes. Now, interest and dividend income should come from special purpose vehicle, and if it was any rental income should come out of the real estate which is directly owned by the business trust, okay, or the real estate investment trust. Okay, now see, first of all, let us see whether special purpose vehicle data. Beta Limited and Hind Arc Limited is an Indian company in which business trust holds 100% of the shareholding. So this indicates that you are having a controlling interest. However, the law says that such percentage of controlling interest allowed at the time of the registration, that exact data not there in the question. So we'll say that 100% is a controlling interest. Okay, so Beta and Hind Arc. Okay, this is a special purpose vehicle. Okay, and Hind Arc has already opted for concessional rate under 115 BA. Now this is something which I told you some time back, that something tricky points are there here, but that we'll discuss. Right now it hardly matters, because it is Hind Arc whether opted for special rate, not opted for special rate, it is a special purpose vehicle. So special purpose vehicle ideally can be any such Indian company, whether you have these exercise this special rate option or not exercise that particular option. Okay, see here the definition of this special purpose vehicle, okay, in which you are having controlling interest of any specified percentage as required by regulations at the time of the registration. Okay, so this special purpose vehicle, this Indian company, this can be Indian company covered by 115 BAA or maybe not covered by 115 BA. Ultimately, that we need to understand now is that these Beta Limited and Hind Arc Limited, okay, these are special purpose vehicle. Okay, so for the purpose, I repeat, for the purpose of this special purpose vehicle, okay, which is investment into an Indian company, this Indian company can be covered by BAA or not covered by 115 BA. Okay, so okay, so this Indian company can be either of this particular company. Okay, so okay, thereafter this Hind Arc has got opted for special rate of tax. Now this is one of the very tricky point, but that I'll discuss afterwards. Now see Gothi Limited. Okay, so Gothi Limited first of all is not a special purpose vehicle. Okay, so and thereafter this Beta Limited is a special purpose vehicle. Then short term capital gains, okay, real estate 10, 7 में 8 real estate directly owned by the real estate assets. Okay, fair enough. Okay, so first of all, interest or dividend income out of the special purpose vehicle. Okay, so this will be covered by 1023 FC. Okay, 1023 FC, 1023 FC, you will be eligible for the purpose of exemption. Now fourth, you will not get the exemption because Gothi Limited is not specified here anywhere in the question that it is a special purpose vehicle. Now short term capital gains is anyway not covered by either FC or FCA provisions. Okay, so the business trust will not get this particular exemption. Okay, short term capital gains on the sale of development properties, okay, this is also not specified for the purpose of exemption in the hands of the business trust. That means this will be not exempt, invariably it will be taxable in the hands of the business trust. Okay, and interest received for investment of unlisted debentures of the real estate. Okay, so interest from unlisted debentures, now that is also not covered for the purpose of exemption, so that is not exempt. Now rental income from directly owned real estate asset, this is very important, directly owned. Okay, and that's the reason 1023 FCA provisions, okay, will be eligible for the purpose of exemption. Okay, so 1, 2, 3 and 8 will be eligible for the purpose of, what should I say, exemption, and 4, 5, 6, 7 will be covered by taxation. Okay, it will be taxable in the hands of the business trust. Okay, now it is very natural that this FC and FCA income, there will be no TDS. Now TDS provisions I have already explained. Okay, this rental income also, there will be no TDS. This is basically for the business trust only that we are discussing. We are not discussing unit holder right now. Okay, so no TDS. On others, there will be TDS on its own merit. On its own merit, in the sense that if the TDS provisions are there with respect to that particular transaction, then the TDS will apply on its own merit. Okay, I am not saying that it will always apply, but it will apply on its own merit. Okay, now come to this particular clause. See, interest we have taken care, dividend we have taken care, this rental income we have taken care out of the assets which is directly owned by the business trust. So these type we have already given the exemption. Okay, now see, in the hands of the business trust, see, in the hands of the business trust, okay, this is one of the very good point with respect to taxation, that it will be taxable at maximum marginal rate. However, if you are covered by 111A or 112, okay, these two type income, this is basically short term capital gains on the listed share, and this is LTCG. Okay, if this type income, you will have that special rate of tax. Okay, otherwise it will be taxable at maximum marginal rates of taxes. Okay, so MMR is the rate of tax which is applicable with respect to the what should I say, the business trust. Okay, so that is one thing which is very much clear. Okay, now whatever is exempt in the hands of the business trust will ideally become taxable in the hands of the unit holder, but that we will discuss at the time when we will discuss the unit holders, not right now. Now see, point number 4, dividend income. Okay, no special rates, so MMR. Short term capital gains on listed shares, so this will be covered by 111A, so that special rate will be applicable. Now then, this is short term capital gains on, this is short term capital gains, development of properties. Okay, no special rate for that, and interest for that also, there is no special rate. So this is one special rate. Okay, and other will be covered by straight away MMR provisions, and you have to just work out the tax liability of the business trust.